presentation of the audit by the auditors. I'll turn it over to Tom to make the introduction.
Well, quite simply, we have Christian Smith, who's the lead auditor with McDonald Page and Company. They have, this is your third year, I think?
Fourth year.
Fourth year doing town and school audit. And just to recall for everyone's benefit, the audit is done for the school board and the council. The staff is here to assist the auditors in their work in collecting field data, but they're here to report on the state of finances for both the school and the town. So without further ado, I'll turn it over to Christian Smith.
All right, thank you. I've handed out some slides to review, some information I'd like to point out within the slides, and then when we get to those slides, I can also point out which pages they relate to in the financial statements. There is quite a lot of information here within the financial statements, and so I'd like to at least have this opportunity to give you an overview of what's in there and ask questions if you do have questions, if you've had a chance to read them yourself. So start right off. I'd like to talk about what the relationship is with the auditors, just to make sure that that's clear that we all have a clear understanding of that. We are independent auditors, and we work for the council and the board. We work with management to perform the audit. And what you've hired us to do is to express an opinion on the financial statements. And the financial statements are the responsibility of management. We do assist with the preparation of the financial statements. However, in the end, it's really management's responsibility for what is presented. The next slide just gives you a list of all of the different reports that we issue, and we'll get into some of them a little bit later on. SAS 114 letter, that's statements on auditing standards. 114. That's basically a letter that we send to the town and regarding governance. If there were any, we list in there any changes in accounting principles, if there were disagreements with management over accounting principles, if there are other significant issues related to the audit, it would be listed in that letter. So that letter that we've issued, we won't go over that, but it's what I'd call the standard, or it's really kind of a boilerplate letter. So there were really no significant issues in regard to performing the audit or applying accounting principles that we need to report with regard to either the town or the school department. So we do issue separate financial reports, one for the town, which includes the school department, and then we also provide an audited financial statement for the school department as a standalone. We also do what's called the single audit report and data collection form. These are test procedures that we perform over the grants that the school and the town receives. A lot of the focus most years is on the school grants and HIDA grants. Those are usually the most significant grants that are received, and we do compliance testing with regard to federal compliance requirements and determine that all the money has been spent appropriately. And there were no findings to report with respect to grants received by the school or the town. State of Maine Department of Audit requires that we issue a procedural form which basically outlines what we did for audit procedures and would identify to the state auditor if there were issues with regard to the audit. We've issued that report. There's no issues with that. We also issue a reconciliation of the MEDMS upload. This is the school's upload of the financial data to the State Department of Education. We're required to reconcile that to financial statements that we audit. We've done that. There are no issues, no problems with reconciling that information. And then we also issue a report to the State of Maine Department of Ed saying that you've complied with the Maine School Finance Act. And that again, it's another standard report. I'd like to go over the management letter comments. We'll start off with the town. First, just to give you an outline, there are 3 levels of severity with management letter comments. The highest level is what's called a material weakness. So this would be a real severe deficiency in internal control that would prevent the town or the school from being able to issue accurate financial statements in accordance with generally accepted accounting principles. There were no material weaknesses reported. The next highest level is what's called a significant deficiency. So this is where there's a little bit of judgment involved. So there could be a situation where current practices may result in a potential issue with financial reporting, and it's significant enough for us to disclose and discuss with you. However, it doesn't rise to the level of material weakness. And there's some judgment involved with determining which level to report of that. So we've got two comments with regard to the town that would be considered a significant deficiency, and we'll go over those here. And there's one other level which I didn't bring up, control deficiency, which is more of a best practice recommendation, where we just might have some recommendations for either efficiency or just better business practices that we might recommend. So we've got two comments with regard to the town. One comment with regard to the school department, and the school department comment is a best practice recommendation. I don't know if now would be a good time to go over those comments, if you've had a chance to look at them. We could look at the towns first.
You should have a number of loose documents, if you will, outside of the bound materials. There's one that looks something like this.
Do you have that one? Yeah, they were stuck in.
Is it addressed to the town council?
Yes, it is.
Yes, and it's a three-page letter. You'll see within the letter are comments, and then there's also management responses. Oh, okay, then you might not have the towns, okay.
No, we have
You have the towns?
Yep.
Okay.
Okay. Everybody have it? Okay.
No, I think that's the one. It's have proper accounting cutoff.
Okay.
Sorry.
Council does, so that's most important.
Okay, okay.
Yeah.
The first comment is regarding proper cutoff of expenditures and retainage payable. So we perform our audit procedures and we perform tests to make sure that all of the liabilities have been recorded as of June 30th, 2011. So that's, we're looking at cutoffs. So as a result of our procedures, we found there were some construction invoices that weren't recorded as of June 30, 2011. They were recorded in the next period. So for GAAP, it's a cutoff issue. It should be in the June 30 year end. And the reason I thought it was especially important to bring up this year in regard to paying attention to what might be out there for contractor retainage, especially with the school construction that's going to be going on. I think it's important to make sure that it is captured going forward. If someone were to run a financial report and wanted to see where you were with expenditures for the program, it should include any amounts of retainage that are owed to the contractor. So, it wasn't a really large amount with respect to the financial statements for this particular year, but I think it could be more significant going forward. So that's why we included that comment.
If I could, just so you appreciate that, this actually is retainage, I believe it was for the Higas Parkway Route 1 intersection improvement project. Retainage, every time we pay an invoice, we hold back a certain percentage, 5%?
5 or 10, depends on
That's doing, so that money is actually due to the contractor, but we hold it back, and that's an agreed upon arrangement at the front end. So that the total that's listed here was actually the amount of retainage that we've been collecting and retaining over time. Frankly, and this doesn't certainly make it right in the past, but this is the way we've done it in the past. So Christian and his team pointed it out, and we'll certainly correct that going forward.
And we actually have a new policy in place for the departments that the town manager authorized, and it essentially says that from now on, we're going to charge the full amount of the retainage to the departments and create a liability account. And then once it's ready to be paid, we'll pay it from the liability account. So from now on, going forward, that expenditure will show in the department's budgets.
And that's in the capital project fund, is it? Capital projects, yep. And that's, and I can definitely say that it's something that we find that's very, very common with the municipalities that we audit, that I think common practice is to, really just record it when you pay it. It is a holdback, but generally accepted accounting principles say you're supposed to accrue it in the period that it's earned by the contractor, so. The next comment covers capital asset tracking and record keeping. So this is the part of the financial statements that we'll get into a little later, the top level of the financial statements. So when you look at your budget, when you look at your fund balances, it does not include accounting for capital assets. This is something that the Government Accounting Standards Boards makes you do for a full accrual basis financial statement. So so we work with Ruth and Gina in coming up with the numbers for capital assets. One of the issues we found, and I know they're definitely working on getting this implemented for this year, is getting the capital assets into a software package that will do the work for them. It'll make the job much more efficient. It'll make it much more accurate. They've been using an Excel spreadsheet for the past number of years, and it can be cumbersome to work with, and definitely takes a lot more time and effort than is necessary, I think. And there's a couple of other facets to this that have provided some complexity over the last couple of years. Completed construction projects, when those are finished, those get capitalized and depreciated. So it's taken quite a bit of effort as well to make sure that when projects are completed, that they're capitalized and depreciated. So that's an area that we think there could be additional review of. And the third bullet that we have here is it's kind of a tough one. Donated roads. Contractors, when they build a development, they donate the roads to the town. The town is supposed to record those roads at their estimated fair value cost. There's been some inconsistency too in terms of how to determine the amount of those donated roads to record. So, just another area where it's kind of with accounting departments working with another department. That department probably doesn't necessarily understand what the information is used for in the financial statements, and there's been some inconsistencies in recording those amounts. So again, I could definitely characterize both of the comments here. They're accounting issues. They're not, they don't affect your fund balance, but they are accounting issues that need to be presented to produce the financial statements for the CAFR.
Try as we might, we couldn't convince him to designate them as a controlled deficiency.
Or wouldn't this first one impact your fund balance since you're putting a liability back on your books?
It would. It wouldn't affect your general fund balance.
Okay, but it would affect your fund balance.
It would affect the capital projects fund balance, right? Yep.
Just appreciate the town is obligated, and this is something I think you could look back to audits in the last 4 or 5 years since GASB 34 was instituted. We continue to struggle with coming up with a good, efficient, accurate way of, one, valuing all town assets, and that means from roads to buildings to equipment to you name it. And then, of course, managing that information and depreciating it appropriately over time. So it's a fairly massive undertaking. I'm sure you can appreciate all the stuff we own. I think we finally have our arms around it. It's going to be much easier going forward.
Are buildings simply just the amortized cost of some life expectancy?
Yes.
It's,
But every time you make improvements,
Yeah,
you
right.
get asked.
Yeah. It's really, it's really the capital projects and the donated roads that are kind of the most troublesome, I think.
Yeah.
The infrastructure piece, the roads, the culverts, the traffic lights.
So moving on, the last comment we have with regard to the town is a control deficiency. So it's basically just a housekeeping or a best practices recommendation. So we're looking to have the town implement a more formal system for tracking federal grants. When a department applies for a grant, there should be paperwork completed and filled out and provided to the finance office so they know what grants are federal, what grants are state, and the finance department can track reporting and compliance with those grants. So, really this just goes down to, there's probably there's quite a number of little grants that the town gets, and we just really want to make sure that there's a system in place so that they don't get missed. I think, all the big major grants are certainly well identified and complied and accounted for. So we're just looking to see that, making sure that some of the smaller grants don't slip through the cracks. And again, something that's, we've given Ruth a form to work with, and she's trying to improve it to make it more useful for your particular situation. That'll be easier for your department heads and her to use. So.
And then we're implementing SharePoint, which is major, I don't know what it's called, but it's helpful for all of the departments. And we have now a place on SharePoint that all the departments can access to put all their grant information in, or at least on the town side. I don't think the school has access to the town SharePoint yet, but so on the town side anyway, we'll be able to track those because it will be the department's responsibilities to enter that information and keep updated.
I don't know if there's any specific questions on those comments.
I just want to clarify that last one. This isn't to say there was any issue, you're just flagging it. There's the potential, given our, frankly, success in obtaining grants and just flagging it for consistency in the future.
Yeah, as I remember, there's a number of smaller grants too that kind of tough to keep track of.
And when they're pass-through grants, as they're called, it's tough, the money's coming from the state of Maine, so the departments think it's a state grant when really it's a federal grant. So that's the other piece that we're having trouble trying to get and, handle on.
Yeah, I mean, I could definitely say all three comments are definitely consistent with what we see at a lot of communities. These are all just things to work on. They're not, not a reflection of, of a poor job by the finance department. The finance department does a fine job. Gina and Ruth do an excellent job. Some areas for.
And I do think that if you're going to SharePoint, I think you'll find that will be a good system if you utilize that. It's a good technology tool that will share information quickly and audit those to it. So I think that's a good move.
So we can move on to the schools management letter, the one-page letter to the school department, written up to the Board of Education.
Is it in the binder?
I think we got to find it.
It's loose.
Do you have any extra questions? I can run upstairs.
I have this one, sorry.
I'm sorry.
I know.
Tom took it and went to go make a copy.
While we're having this low, with regards to retaining fees, is that going to be in effect when we start the Wentworth project?
Yes, I gave a, did I give a copy? I think I gave a copy of the policy. So, you can, bring it to the board, modify it, what you guys want. And that way both, all the departments and both sides will be following the same process.
Well, I think that you're already working together on it, so
Yeah.
that makes.
We've already started a process to make sure that that whole funding is tracked exactly.
Right, yeah.
I know. Always said that.
Of course it will.
Canada's very Canada. She says she heard me. They always we know Canada. Canada's putting down on the work.
Thank you very much.
That's okay. So we have one comment with regard to the school, and it's it's a best practices recommendation. We do audit procedures over the student activity funds, as well as, the district funds. So the student activity funds are not actually, it's not actually money that the district has available to spend, but you're an agent for those funds, and you have to, maintain custody and control over those. So when we perform procedures at the middle school, we noted that they are not using a receipt book when collecting cash receipts. It would definitely be a best practice for pre-numbered cash receipt books to be used at all of them, but we found that at the middle school they weren't doing that. So that would provide a better trail for money that's received by the student activity advisors, and would provide an opportunity to follow up if there are discrepancies in the future.
I did notice in the report, the fund balances by each activity in the middle school is still listed, so they must be keeping track of it.
Yeah, they are. They're keeping track of it. There's just not an independent documentation.
Yeah, I think it's on the sort of the parent or the spender side that we're working right now. And as far as actually making the deposits and tracking the funds once they come into the account, we've got some good stuff in place. But it was, if a child brings in $20 for a field trip in cash, we weren't handing out a receipt to that child to take back to the parent. There's other paperwork that the parents fill out so that they know what's going on. But we want to actually implement something where we can hand something back to them and say, okay, we're going to $20. And I've been talking with the middle school administrators about that, how best to do that. They don't really take a lot of cash, but when they do, we want to have something.
Okay, wait, may I suggest you have a seat up here just in the event you have some comments so people can hear you at home?
Because they can't hear at home if you're not into the mic
I'm sorry.
system, so.
I'm mumbling too. I have my evening voice on. Would you like me to repeat myself?
Probably for the
I have spoken with the middle school principal, and he and I are working together to figure out what's the best way to create a simple receipt that can be given to a child who brings in cash. And as I said, it doesn't happen very often. Most schools will pay with a check. And the one time that we do collect a lot of money from parents and students is when we have field trips. They're being paid for by the parents. Most of our other arrangements where children are paying have an immediate reward, like you pay for a t-shirt and you have the t-shirt to take home. But if they're paying for something that's going to happen out in the future, we're going to work on having something for those folks who do pay with cash.
Good. The next slide is just an overview of what's in the town's financial statements. We'll go into a couple of pages once we get a little further back into the slides, but so I just wanted to at least give you an overview, a list of what's in here, so you have a basic understanding of what's in here. There really is a lot of information in these financial statements. They're really not designed for the general public. They're designed for the bond rating agencies, and so if you feel it's overwhelming to read them, it definitely is. So within the financial statements, pages 1 through 10 is the transmittal letter, which basically just gives you an overview of the town that's required as part of the CAFR program. Our auditor's report is on pages 17 and 18. And what you want to look for there is our opinion. And we have expressed an unqualified opinion on the financial statements. We've said that they've been presented in accordance with generally accepted accounting principles, and they're giving reasonable assurance that they are presented fairly and there are no material misstatements in them. So we've given you an unqualified opinion, which is the highest level of opinion that we can give. That's what you strive to receive. Management's discussion and analysis is in here. It's on pages 21 through 32. That provides the reader with a summary of the year's operations. That's designed for the average citizen. You could read those 10 pages and have an understanding of how the town is doing, whether it's doing better or worse than last year, what were some of the key transactions for the year. So that's really designed so you don't have to read the entire financial statement and you'll have an understanding of how the town is doing.
One thing that I would like to bring up is that this is our 6th consecutive year that we received the Certificate of Achievement for Excellence in Financial Reporting from the Government Finance Officers Association of the United States and Canada. So it's kind of a prestigious thing. The finance department worked very hard and long to put this together so that so that hopefully this kind of says that we've completed all of the requirements for financial reporting.
One clarification, in the transmittal letter, which I thought, given that this will go to bond rate, we are looking for school completion open in the fall of 2014, not 2015. You sent that one, ending this as a rating agent.
Okay, so you have that, what page was that?
Page 8, next to last paragraph.
Given that's one of the things in that 14. Just a typo.
Oh, 2015. I think it's, it was supposed to be you're going to be in the school by 2015, so you're right.
Yes. Okay.
It's in the fall of 2014.
Yeah, tell Ann Mary it's 15. She'll have a stroke.
That's true. Thank you.
So within the financial statements, and we're not going to go over in detail any of these pages, but just to give you an idea, so what's called the government-wide financial statements, that's on pages 35 and 36. It's what's called the full accrual basis of accounting. It's presented to be similar to what a business would report, so where we talked about capitalizing your buildings and roads, infrastructure, and depreciating them. All of your debt is going to be presented on those pages, including your liabilities for sick time, your capital leases, and you have a accrued interest, and another fairly large number is your post-employment benefits liability. There's a liability for healthcare retirees that is all accrued and recorded on these statements, but they won't show up anywhere in your fund financial statements. So there is a difference between when we're looking at these statements and the other statements. Just moving on, pages 37 and 38 is your what's called the modified accrual basis of accounting. So these closely, they're close to what your budgetary basis is presented as. One major difference would be where the state makes, we call them on-behalf payments, where the state of Maine pays the Maine State Retirement System for the teachers' retirement contribution. That's, I think, $3 million a year, roughly. You don't budget for that number. You do disclose it in your annual budget pamphlet. So that number is presented on page 38 as an expense and a revenue. So there's no net effect on your fund balance, but it is a resource in use that is provided for your benefit. So that's the one major difference between these statements and your budget statements. Your budgetary basis statements, that's on page 40 of the financial statements. So this is going to mirror what your internal accounting, how your internal accounting is set up, where it presents your budget results compared to your actual results for each of the departments. I've got a few slides that cover some of the numbers in this schedule that you can certainly, I think out of all there's 130 pages in this report, and the one page that anybody ever looks at is probably this one, page 40. So if you want to take a few minutes to look at it and see if you have questions, but this should mirror what Ruth has provided internally for monthly financial reports. So there weren't any adjustments to what she does in terms of preparing this statement. We also present fiduciary funds on pages 41 and 42. These are trust funds and the student activity funds for which the town or school does not have legal access to use in general operations. So this is where you're a fiduciary for these funds and are responsible for overseeing how they're spent. And then there's pages and pages of footnotes that support the schedules and the basic details that we've talked about. Just wanted to make mention, we have a slide that'll cover GASB 54, but so this year there was a new accounting requirement, fund balance reporting. So the Government Accounting Standards Board looked at what people are producing for financial reports, felt that people were inconsistent in how they report the components of fund balance. So they came up with definitions that are intended to help the user of the financial statement better understand what the constraints are, the funds that you have, what is available to be spent now, what can't be spent ever, what do you have set aside for a specific purpose. So there's a slide I have later on, and we'll go into that in a little bit more detail, just so you can see how that's laid out.
Members of council may recall, through the finance committee, and then the council approved the new fund balance policy a year ago, maybe a little before, and it was done in the knowledge of and anticipation of GASB 54. So really clarified the method of calculating that fund balance. Mm-hmm. It's always been a challenge in terms of what's included in that calculation.
The next slide, I'd always like to give you a little bit of information of what, there's always changes in the accounting world. So what's new in future years? GASB, they're currently working on a pension accounting project that's going to require full accrual in the government-wide financial statements for pension liabilities and require more disclosure. So right now we've got teachers that are part of the Maine State Retirement System. We've got town employees that are part of a separate part of the Maine State Retirement System. The Maine State Retirement System issues a financial statement on where they stand. Within your financial statements, there's mention of which of these pension plans you're part of, but there's not detailed information as to what their assets are, what are their liabilities. So what is proposed by this standard is that in 2014, I believe, they're going to require you to disclose that information and also accrue a liability for whatever your share of the pension obligations are, if it is in fact unfunded or underfunded, I should say.
Do we get to accrue an asset from the state then to offset it?
Well, you get to accrue an asset for whatever assets they have in the set aside already.
So is that going to impact the town's fund balance? Because obviously, if the state's $2 billion shy, the allocation is going to be X to every town.
It won't affect your financial statement, your fund balance, but it will affect the full accrual one. So I mean, the idea behind this is that, they really feel that there's a lot of promises that are out there in municipal, state government that isn't being fully recognized. And they want it right out in the front, and they want people to be aware, okay, this is what you've promised people for benefits, and this is how much well, it's not going to require that you fund it, but at least it's going to show you this is how much you would need to pay to catch up. There's no requirement that you fund it. It should definitely make that clear.
And GASB, for those who don't know, for the folks at home, stands for Governmental Accounting Standards Board, and they're the body that regulates what municipal governments and actually local, state, county have to report or how they report, similar to the Financial Accounting Standards Board on the private sector side.
So, as part of preparing for this, I went online and found the Maine State Retirement System's financial statements, and just because I wanted to get an idea as to how well-funded they were. With respect to the plan that the town employees are in, they're 93% funded, which is pretty good. With respect to the teacher employers, the state employee, well, the teachers are lumped in with the state employees. That plan is funded 77%. So those are the numbers as of June 30, 2011. That's all going to change too. This new standard is going to change the way they calculate things, which I think are going to make the liabilities go up. And again, this is proposed, it's in the works, so it's hard to say what the ultimate outcome would be, other than to say that there'll be more information in the financial statements that will provide primarily the bond rating agencies an idea as to what are your future commitments. So I just have a few slides that cover some of the financial information. So I've just got a schedule here that shows the general fund balance for the town for the past 3 years. Now this includes the school portion as well. Now this correlates to page 37 of the town financial statements. So you can see that the town fund balance has declined over the past 3 years from probably about $8.5 million to where it stands now at about $7 million. And this is just the general fund balance. The next slide, I think, is going to show you some information that relates to GASB 54. So statement 3 is page 37. First column is the general fund. And if you look down towards the bottom of the page under fund balances, you can see we've listed a lot of different figures here. Restricted for the town, $2.6 million. Restricted for education, $495,000.
Yeah.
Committed general fund, $629,000. Assigned general fund, $2.2 million. And assigned town, $954,000. So this slide that I've presented, I'm trying to kind of show you the different portions of your fund balance and what can be spent. So working from the bottom up, unassigned fund balance, that's the portion that hasn't been committed in any way. So that's about $954,000. The next color segment up is the assigned fund balance. So these are funds that have been designated for a specific purpose, but they can be changed. This was assigned either by encumbrances or by carryover of funds from the prior year.
Ruth, could you give us an example of one that might be familiar to council?
Of an assigned?
Assigned.
Well,
There's a
as
note,
Richard said,
actually, there's a footnote that might be better, that actually details this out a little better.
Page 59 shows the assigned fund balances.
Yeah, page 58 and 59 gives you a better picture, I think, of what the different components are.
Page 58 is a new requirement. Well, it's a new way of showing the fund balances and how they've been broken out into the various new categories that GASB has assigned to us. And then page 59 shows the assigned fund balances of the general fund. And most of these are requested carry forwards because of projects within the operating budgets that were completed. We also have, the third from the bottom is the encumbered purchase orders. So those are purchase orders that went in through the system, Munis system, and the projects were completed in the current year, 2012. And then the last one is the town's accrued sick pay. So those are an example.
So within these components of fund balances, anything that is not restricted, anything that goes below the level of restricted is technically available for use in the current year. If you've got a committed fund balance, like on page 58, you'll see there's a committed portion for unemployment compensation, beach reserve, and Honeywell for $630,000 roughly. So that is one change with GASB 54. In the past, this was recorded as a special revenue fund, but the standards now basically say, based on the source of funding, that it has to be reported in the general fund. It's still committed, whether it was in one fund or the other. It's still, the council has set aside a purpose for this money, and it'll stay that way unless the council decides to do something different with it. So just wanted to point out there the difference between committed and restricted. So committed, council has voted an action to use the funds for a specific purpose, and it can't change unless council decides otherwise. If you look up the next level, restricted is funds that you are not legally able to spend any other way than for what they're intended. So that's a really good example of that is grant funds. You can't spend grant funds on the light bill. So those show up in the restricted column, either under the town or the school. And we also list the education department as restricted as well, because the town can't take that money, we can't take that money and use it for other departments. It has to be used for the education department. So we've listed that separately as restricted, about $495,000.
Reserve for accrued sick pay, is that the ability of an employee when they leave to take a cash out on unused sick pay?
Yes.
And why wouldn't that be a liability?
It's not a liability on the fund financial statements because it's not going to be paid out in the next year.
But it is in the statement wide, that big one that says everything's included.
Okay.
We only include the current portion. If somebody were going to leave within the next, from June 30th to like August 31st, then we would include that portion.
Correct.
Why the teacher accrual is a liability and not a fund balance. That's actually 2 months.
Because it's
Even though it's a liability as of June 30th, it's just like this. Fine.
well, that's a little bit different because those are wages, yeah. But yes, but still it's getting paid. Yes, big bucks.
Kristen, I wonder if this would be a good time to ask the question. Could you just describe how the Higas Parkway assessment and that debt is affecting?
Yeah, we've got a fairly large number here with the Higas Parkway under restricted. The issue with these funds really, and there's $2.1 million listed in the general fund and another $404,000 listed in the under the Higas Parkway assessment fund. So really what's the situation with this is you've got receivables on the books. You're owed money from the landowners, but you haven't collected. So there really aren't, those receivables are included in your fund balance, but you really don't have the resources to spend because you haven't collected the cash. So that's why we've listed those as restricted, because they really aren't, it's really not available to be used currently. And that will change once those funds are collected.
That's a huge issue for us. We're 10 years into that debt. Those assessments, many of them are coming due. Land is not selling, so that's an issue I just kind of put out there that I think we'll have to bring to the council and find some way forward. But the town has been obviously meeting its debt obligations right along, yet the assessments just haven't been here to offset our costs.
And it's been difficult. We may not have the funds from the sewer assessments next year to fund the debts. We may have to add that into our operating budget until, and hopefully in the future, once
Yeah,
they do sell,
think so.
we'll be reimbursing the general fund. I'm not 100% sure. It will depend.
The next couple of slides all correlate to page 40 of the financial statement. So there's some figures in here that do relate to both the town and the school. So these are all budgetary numbers, so you can see the major revenue source for the town, of course, is property taxes, so we're just showing you the trend here for the past 3 years of the increase in property taxes, being about 42 million in 2009. In 2011, that number represents about 44.5 million. So about maybe a 5% increase over that 3-year period. Moving on to the next slide, you can see other major revenue source trends for the past 3 years. No surprise to anyone, the state education subsidy is steadily declined from 7 million in 2009 down to less than 6 million currently in 2011, and I think that's continuing to go down. You can see excise taxes are fairly consistent over the 3-year period, about $4 million. And the state revenue sharing, that's down as well from a little over $1 million to about $1 million currently.
So obviously, these decreasing revenues directly correlate to the increase in property tax requirements.
Next one shows your expenditures are fairly flat.
Yep, the next one shows your budgeted expenditures. So you can see pretty much consistency, hold the line for the last 3 years. Maybe some slight increases in a couple of the categories, but pretty steady.
And I hate to say it, but look, wait for 2012 to be on this graph. We're going to see that trend continue right here. Now, speaking to the revenue side of the equation, I do expect probably a continued level spending.
So that, the next couple of slides, I have a few things on the school department. So we've issued an auditor's report on the school department as well. We've given the school department an unqualified opinion, which is the highest level of opinion we can give. You might notice there's an extra paragraph in the auditor's report. The school department does not present a management's discussion and analysis, and so as a result, we're basically just saying that it does not. The financial reporting that we've presented for the school department is consistent with how every other school department in the state presents. So that's a common presentation situation, not an issue. So for the school department, we don't have government-wide level of financial statements. We do not present a financial statement that includes the school's capital assets or the school's portion of the debt. Technically, the school's not a legally separate entity for accounting purposes, so so the presentation here is solely on a fund basis. So definitely simplifies it, that's for sure. So we're going that route with preparing these financial statements. So, the budget for the school department, you can find that on page 4. Budget to actual results. See, as of the end of the year, there's a fund balance of, well, on a budgetary basis, $525,000. The number I've been quoting before, of $495,000, is a fund financial statement number, which is slightly different because of compensated absences. The next slide shows the 3-year trend on the school department's fund balance. So you can see a pretty steady decline there from, I think, about $2 million in 2009 to about pretty much about $500,000 in 2011. So we've spent the school department fund balance down pretty aggressively to keep the level of services consistent. The next slide is going to be my GASB 54 presentation. Maybe it's a little easier to understand with the school department, as the school does not have a lot of different components of fund balance. So the first portion, about $300,000 of fund balance, is listed as unassigned, and then the next portion, $200,000, is assigned. And what the assigned portion represents is the amount that you intend to spend out of next year's budget, out of the 2012 budget. So if all things go according to plan for 2012, at the end of the year, you'll have roughly $300,000 of fund balance available. So that's really what this slide is representing. It's representing the components and what you'll have left when you're done with your fund balances. think that's all I have. I certainly can answer any questions now or later if they come up. You can certainly contact us. There's certainly a lot of information here, and hope I've given you enough information to understand where you stand.
Thank you very much.
Thank
We
you.
have another meeting at 7.
We do too.
Thank you.
We do too.
Just very quickly, Finance Committee is going to take up the matter of reappointment of the auditor at the next meeting on February 21st, which has been a suggestion, and staff would support extending the services for another year. We'd like to run that through the Finance Committee, and assuming they see that favorably, I expect it to be on the following council meeting for action.
That's the plan. Thank you, everybody.
Thank you.
Appreciate it. Thanks, Todd. Thanks. Welcome. This is our second workshop. This one is with Eco Maine, and we have with us tonight Ruth Porter, Mike Shaw, Director of Public Works, Kevin Roach, the Director of Eco Maine, and this is the Eco Maine workshop that we like to have once a year. We'd like to have Kevin come in and tell us good news. Usually he does, and that makes us all happy. Tom Hall's here, and Vice Chair Councilor Roy. My apologies for the other councilors that couldn't be here tonight. I heard from Councilor Holbrook. She had a family emergency and she couldn't be here, but we look forward to this, and this is being taped, so obviously everybody can enjoy it. So without further ado, I'll turn it over to you, Kevin. Thank you for being here.
Thank you for having me, and I appreciate the opportunity. One of the things that we do want to make sure is we're connecting with our owner communities, and this is a way that we can stay connected with all of our owners. For those of you who may not be familiar, Eco Maine is a quasi-municipal organization. We have 21 owner communities and another 23 what we call associate or contract communities. Those communities aren't owners, but we have long-term or short-term contracts with those. One of the things that Eco Maine is gearing up for is the North American Waste to Energy Conference. For the first time is coming to Portland. And so we're excited about it. On April 22nd through 25th, about 400 professionals in the waste to energy industry from around the world will be convening here in Portland for their annual conference. So we don't have that opportunity to attract this crowd very often to our corner of the world, but Eco Maine will have the opportunity to showcase our waste to energy plant, and it's something that we're proud of, and we're looking forward to that event. I brought a document which is basically a summary, an annual summary, and I have plenty of others for the others who aren't here.
Yeah, look.
But there are some highlights in this report. I won't go over the whole thing, but there are some highlights that I just wanted to bring to your attention. First off, on the inside cover, you'll see a map that shows all of our member communities. Those in green, those 21 owner communities, are with us for the long haul. The ones in blue are the contracts that we have that are 20-year agreements. We call those our associate members. And the ones in orange are contract communities, and those can be basically any length of time. And you can see that we actually have two New Hampshire municipalities with us now, Newington, New Hampshire, and Greenland, New Hampshire. And some of these municipalities have a recycling arrangement with us. Some of them have just a waste arrangement, and some of them have recycling and waste together. So it really depends on the community. But the reason why we're trying to expand our region is because over the last 5 years, a couple of things have happened. Number one, recycling has become much more popular, and so we've lost some of the waste that used to go to the waste energy facility to the recycling facility, which was done purposely, but it's opened up, I guess, a new window of opportunity at the waste energy facility for new towns to come on board. Also, the recession has had an impact on us. From our owner communities, we've seen a 25% reduction in the amount of waste that's coming into our facilities. So we've had to replace that waste, and we have. We've been continuing to operate at full capacity, and we've replaced it, and we've replaced it with new sources of waste, preferably from new communities, but also from contracts with waste haulers as well. So that's one of our in our business plan is to keep the facility running at full capacity. Scarborough is basically owns just under 10% of the organization, so it's a significant portion of ownership that the municipality has.
And, Kevin, if I could, how is that percentage of ownership calculated? Is it from the initial buy-in, so to speak?
There's a couple of different ways we use that formula, but the buy-in, which was in 2006, that is the ownership that Scarborough has, and those were the tons that were coming in at that point in time. So that's kind of a fixed rate. The 5-year, the assessments is based on the 5-year rolling average, which is the last 5 years of your waste tonnages.
Go ahead.
Go ahead, Kevin. We just got.
There are the chairs next door.
Okay.
I'm not going to stop our meeting for their.
You can open that door from the other side.
Oh, go
They're
ahead.
underway.
Yeah, yeah.
Okay.
Go ahead.
The next highlight that I wanted to mention is on page 7, and this is a little bit on our financial performance from fiscal year 2011. You can see that operating revenues were favorable to budget by about $2.9 million. This was mainly due to the positive or favorable recycling scrap sales. Over the last couple of years, actually, the markets for recyclable materials have been phenomenal. Commodities markets in general have been pretty good, but recycling scrap has just really taken off. Since the crash that we experienced in the fall of 2008 when the stock market crashed, the recycling markets crashed right with it. But since that time, they've really improved, and so we had an earning of $1.7 million that was favorable just on the recycling scrap sales alone. And then also commercial tipping fees were favorable to the budget by $1 million.
I wish I could exceed revenues by 10%.
The 1 weak area, which this is a summary page, but the 1 weak area on the operating revenue is in our electricity. Over the last 2 years, the electrical markets have come down substantially. Basically, over the last 2 years, our revenues have been cut in half. So we sell electricity from our waste to energy process, and we used to just a couple of years ago we were selling it for between 7 and 8 cents a kilowatt hour, and now we're down. The new contract, which starts February 1st, will be 3.5 cents a kilowatt hour.
Wow,
So
that's a big drop.
it's quite a hit.
Yeah.
Luckily, we've exchanged the scrap sales with that revenue source, and that's worked in our favor. And then also, which I'll get to in a minute, debt service has come down quite a bit.
What part of your revenue is electricity revenue?
This new year will probably be about $3 million. Yeah. And it used to be upwards towards $7 million.
I'm sorry, maybe you addressed this. What's happened in the market that there are just more providers?
It's natural gas being inexpensive. And so the electrical markets follow the natural gas markets, and with the natural gas down, it's brought electrical prices down. And we've seen this in most of the providers of electricity have seen this. Only 4 of the 8 wood boilers in the state are operating simply because it's unsustainable at these markets.
Is there a possible way for the town to be able to make direct connection for you as a supplier of electricity? I kind of like the idea of this circular. We give you the waste, you make the electricity, we use the electricity. And I know it's more complicated, so we may not be able to, it's not like getting an extension cord from Eco Maine and plugging it into the high
Has that
school.
been explored, or?
Yeah, we did put an extension cord into our recycling facility, but because we're contiguous, we were able to do it without becoming a utility. We have explored it, and when we've explored it in the past, at the end of the day, even though there's a margin between what you buy electricity for and what we sell for, we looked at that and we thought we could be able to close the gap there. But at the end of the day, it appeared at that time anyway that we were going to lose money on it. One of the things is obviously an owner wants to buy for as little as possible, and we wear a different hat. We want to sell as much as possible. And so we were working with a couple of the municipalities who were interested in doing this, and it didn't appear like there was going to be financially favorable to either entity at that point in time. But it's something that we haven't looked at it since the markets come down so far, and it's probably something that we want to look at. The other thing is we did do a feasibility study to supply a neighbor, Unum, a campus, with electricity, and that fell apart simply because the return wasn't there. It was well over 10 years. Return was 13 to 15 years. Again, the reason being their natural gas prices are pretty low, and that's what we're competing with.
How much do you think individual efforts towards reducing energy costs attributed to that drop in energy?
I don't think that piece of it is my area of expertise. From from what I understand, it mostly is followed natural gas prices, and that's the biggest chunk. It may have had some influence, but I don't think I can really say if
Quantify it,
that
yeah.
is
Just
quantifiable.
personally, I've reduced my electric bill from $140 a month to $62 in
Yeah.
a 4-year period.
What I can
So-
say is supply and demand definitely is affecting it, and so on the whole, I think demand is down and
Yeah.
so supply is up. So I think yes, it does have an impact.
I'm speculating, though, I suspect demand is down really due to the recessionary times,
Yeah.
more so than
Yeah,
the inefficiency
probably,
efforts.
Yeah.
I think so.
Yeah.
I agree, yeah. But from the wholesalers that we speak with, and we had 4 bidders on our contract this year. So what I do know is that we got a competitive rate because all 4 were within $150,000 of each other. So it was competitive, but all of them have blamed it basically on, I say blamed it, but there are some winners to this problem, I guess.
Natural gas, yeah.
But in our case, all of them have indicated that natural gas is the only thing probably that's going to bring that back up if it's going to come back anytime soon. On the expense side, also on page 7, you can see that our expenses are actually listed at just being over budget, but we really came in under budget if you include the non-cash items. We have a non-cash item out of the landfill. It's the landfill closure liability, and it's an item that we don't budget for, but yet we get hit with it on our books. And if you didn't include the non-cash items, would have come out under budget. Our cash position for fiscal year at the end of 2010 was $23 million. At the end of 11, we were at $22 million, and today we stand at $22 million. So that's cash basically we have in the bank. The board has determined some of that, designated some of that as reserve money, and there's a number of different reserve accounts that we have. But ultimately, there's a 5-year plan that the board has approved and put together that outlines where that money goes. But if you lump it all together, it's $22 million. Debt service. The final line there you'll see is the debt service. This year we paid out $13.2 million in debt service. You'll see that's higher than what we budgeted, mainly because we decided to pay off a couple of long-term leases that we had on equipment, and we also paid off a term loan that we had because of unfavorable rates. So that's why it's up to 13.2. And on the next page, page 8, you'll see we're in a pretty good place, as I mentioned before, with debt. You can see if you go, obviously we're in fiscal year 2012. We've already made that payment of debt service of $7 million. I'm looking at the lower graph there, the lower chart. So really, amazingly, next year, July 1st, we've got a payment of about $4 million, and then we're really almost done at that point with debt. There's a little bit that hangs on for a couple of years, but for the most part, it's gone. So I think that's another accomplishment that the board, I think, is happy with.
I think, yeah, the board a few years ago made the commitment that they were going to pay down the debt and do it aggressively, and I think everybody agrees, Mike's on the executive board, everybody agrees that was the right thing to do,
It's paid off, I think.
But at some point, if you have decreasing, if not eliminating your debt in the foreseeable future, and then have healthy cash reserves, at some point, you're going to have to start spending money. And I suspect you've got a big plan to maintain and some capital projects coming down the line that will take care of that.
Yeah, the plant's 23 years old.
Yeah.
And so it's I think we've done a good job maintaining it. We've the board has approved some pretty hefty expenditures over the last few years to upgrade, particularly the boiler walls that have degraded over the years. And we're going to see more of that, there's no doubt about it. But I think we're not going to see it to the tune of the debt service that we had seen in the past, where we're paying out $13 million a year. So I think we will eventually have to take out new debt, and particularly depending on where pollution control goes. If those regulations tighten, there'll have to be some investments that I think will have to be made. But I think they'll be affordable investments. And now that the plant is behind us, that was really, that debt service was associated to the plant and the upgrades of the plant. And that's behind us.
I guess let me ask it a different way, more directly. So until you have to take on significant additional debt, and you mentioned you have healthy reserves, is there any hope that the owner communities will see some reduction in rates, or I would say dividends, but at some point, it doesn't make sense to keep amassing that sort of money?
Yes, and that's a good segue into my next topic, which is
We didn't
assessments.
plan this.
You got the,
He's,
yeah, that was good.
Right, yep. So on the very last page, you'll see I put a couple of additions. Very last page, it's there, all the way inside the back cover.
Right here. Right here.
The
There's
loose?
a paperclip. Yep, there's 3 loose additions there. First is the power purchase agreement. Actually, I discussed that already, but you kind of see the 21% reduction just from last year, which was really even greater than the year before, which would have basically been cut in half.
And Constellation was a successful bidder?
They were. Yep, they were high bidder. We had 4 bids. The next attachment you'll see is the assessments. So I think a lot of the board feels the same way you do and have made the same comments that you have made.
Mostly of my colleagues all looking for money.
Hey, went to the same meeting.
And one of the directions that I received, last year was, we'd like some money back. We'd like to start seeing some kind of break here. We cautioned, EcoMaine staff has cautioned that we not do this too quickly because we don't want to get ourselves into a situation where we give back too much and then we come back and ask them for more.
Makes sense.
Worst case scenario, what that would be. So in this case, if you go over to assessments, you can see where assessments were in 2011. And if you go all the way to the bottom, you can see it in total, and then you can also see obviously Scarborough as well. But for EcoMaine in total in 2011, assessments were $4.45 million. We brought that down by about $250,000 in the current year, and then next year we've already set the rates for next year, and we've reduced it by another $1 million. So over a 2-year period, that's a reduction of $1.2 million in assessments. Scarborough has seen a savings over that same period of just under $150,000. So some board members have stated that that's not enough. Others have stated, well, let's be patient. And our 5-year plan, I think shows that over time we will begin to bring that assessment down further. And one of the things that we're concerned with is, number one, we've had a great year as far as recycling scrap sales, as I mentioned, but that could turn the corner tomorrow. And in fact, we've had quite a downturn in the market over the last month. So that could change things to the tune of we're talking millions of dollars a year. And then the other thing is, we don't know where electrical prices are going. I'm anticipating that we're going to be in this downturn in the market for quite some time. So without much recovery there.
This is a question perhaps from Mike. I'm just looking here at the annual tonnage for Scarborough. The first year reported, 06-07 year. What accounts for the big drop-off? Did we start a recycling program, curbside?
Yeah.
yep.
And that's a trend you've seen in other communities that have gone single stream?
Depending on when they go single sort.
Single sort.
Yep. That's when you usually see, well, particularly when you go curbside. And in your case, you drop by 2,000 tons. So most communities saw that. Some communities did that sooner than others. And those communities saw that benefit the year that they went curbside.
We actually had to hold off for a period of time because we're waiting for the single sort facility to come online. And that was built there.
I remember that.
Yeah.
I remember you calling me asking when, hurry.
Yeah, exactly.
Step it up.
You had 7,000 bins at the public works yard.
Yeah,
Yeah. So that program, has I think paid off for us well and paid off for our member communities. And that investment was about a $4 million investment by EcoMaine back in 2006, and it actually didn't start until 2007. So it's been a big addition to our facilities. On page, if we can go back into the middle of the book, on page 14 and 15, you'll see some tonnage figures. And I'll focus on the Scarborough tonnage, which we've kind of just discussed. And on the recycling side, you saw the big emphasis there in 2007 when you started the curbside. Now, it's come down a little bit here and there over the last couple of years. I think some of that's the economy. People are buying less, and when you're buying less, you have less recyclables. We see it certainly on the business side. Business is closed, they don't have any recyclables. So a lot of communities, we have seen a downturn in their recyclables since the recession in 2008. But it's interesting if on the next page, on page 15, you can see your analysis of solid waste tons and where they've gone. And again, two things I think. Most importantly, your curbside recycling program. There was quite a savings there. And then also the economy, again, for the same reason.
So how do you make money in the recycling end of things?
You have to have, the secret is, if there was truly a whole lot of, the margins were there in recycling on a small scale, town by town, you'd see an entrepreneur opening up shop in every town. That to me is the proof that it only happens when communities get together. We've brought together 44 member communities, and we have 36,000 tons of material a year. Now the margins are there by sheer volume to make it happen and to make it work. And so most of our costs at the recycling facility are fixed. So when we bring in an extra ton, doesn't mean we add staff, doesn't mean we have to add a whole lot of infrastructure there. It just means that we get to basically flatten out our overhead over more tons. And so that makes a lot of sense. So to me, the secret is, and when we went single sort, we knew we had to get over 30,000 tons, and we broke that pretty quickly. Now we're at 35, now we're shooting for 40,000 tons, and I hope we can get there. We're still not at capacity. We have room to grow, and so we're out there. I have a person knocking on doors looking for towns who want to join our 44 member communities.
So the revenue comes from sale of those commodities?
Yes, it all comes from the sale of the recycled goods.
And that's
Like metals and...
cardboard, I suppose?
Yep.
Yeah.
Yep. Cardboard,
Big cans of
newspaper. We're
plastic
selling
jugs.
newspaper for for $75 a ton. It was well over $100 a ton back just a couple of months ago, but that's a pretty good return. Plastics, the milk jugs are, the market's been, well over $600 a ton. I remember in '88 when I entered the business, I had to pay somebody to take that same material away. So that, $600 a ton, it's getting up toward aluminum prices. So that's been a real positive market. The detergent bottles, the whisk and the Tide bottles and all the detergent bottles have pretty good value. It only has value, of course, when it's in 2,000-pound bales. So there is a volume issue there.
Well, and the real key to the success is that the value you add to the single stream. It comes in as a single stream, but you put the labor in to sort out and really sort those commodities such that you get the highest value for them.
Right.
The different grades of plastic, for instance.
Yep. Yeah, exactly. And it's been interesting over the last 20 years, the newspapers were much more prevalent 20 years ago than they are today. And very few people have subscriptions now, not very few, but a lot less than did. And so when I look at the product that we sell, that I used to sell 20 years ago, that we're selling today, it's a totally different product because there's so much color in the newspaper. Everything's printed, everything's magazines, it's inserts, it's,
Catalogs.
Catalogs, yeah. Whereas it used to be, I remember back 22 years ago, this magazine was considered a contaminant. And I used to have to go up to the mill to see if we had any magazines mixed in with our newspaper. We had to take them out because the mills were so particular about what they used to take. Now they actually like the magazines in there because it's adding fiber. But back then they couldn't handle the clay content of the magazines and the glossy stock.
That's those commodities can be really volatile in pricing, right?
They can, but more, I think there's more and more demand for the material because new mills have set up shop to make paper from paper as opposed to, paper from trees. So there's a new level of demand that wasn't there 20 years ago. So I think the market is there to stay, but yes, you are exactly correct. It is volatile, and we're going to see it is cyclical. and we're going to see downturns in the market. I just don't think we're going to see the long periods of where the material is just not worth anything. This last crash we saw, I mean, the crash only lasted for us, maybe 4 to 6 weeks. And then we started to see recovery, and we stockpiled. Nothing went to the waste energy plant, nothing went to the landfill. Our board decided to make that commitment and stockpile, betting that the market would come back, and indeed it did.
Interesting, too, I know somebody from ACO Maine went to the senior center to talk to them about what can be recycled and what can't. Of course, that's changed a lot, too, because people thought it a cumbersome process before, and now it's really, a lot easier for people to,
Well, that's a big
single string.
single sort. You just throw it all in there.
Yeah,
and
because,
someone
they
else-
had to rinse them before, and they had to separate them all out, and, so maybe more people,
I think that certainly helps the recycling numbers go up, the
Oh,
easier
yeah.
you make it.
yeah,
Uh,
yeah.
the
I know
more-
the senior citizens enjoyed the talk and got a lot out of it, so.
And Mike was telling me today a little bit about the commercial side, that the commercials have access to the single sort as well. So that's going to make it easier for businesses to recycle.
Yeah.
And I think we'll see some growth there in tons. Every ton that comes into our facility benefits, our member communities. The next item that I wanted to talk about was metals mining at the landfill. About a couple of years ago, we started a conversation with a company called Reserve Management Group. They're out of Ohio, and they were interested in mining our ash fill for metals. And we finally put together a contract. The board approved that contract, and currently they're out at our landfill processing, sifting through the ash, screening it, and processing about 500 tons per day of ash and recovering about 50 tons of metals from the ash product. So about a 10% recovery. And then they're selling that scrap. Again, the scrap market is strong, so there's a desire or a need or demand to do this. So that's been ongoing since November 1st. November, they kind of worked through, I think, some of their startup pains. But since December 1st, they've been operating smoothly and pretty much incident-free since December 1st.
See, that makes total sense to me. When I first came on the council years ago, it was like, nobody could understand why in the ash all the metal was in there and
Yeah.
why that wasn't pulled out, and we talked about ways to do that, and now we're doing it. It just makes sense.
Yeah, because I can remember going to the plant when it was first opened, too.
They used to bury all that
See all the
stuff.
metal coming out, down the chute to
And
go
that's,
to the
the metal
landfill.
survives the incineration? That
It does.
Yes.
Does.
But now we capture that, right, when it comes out of the...
We put a magnet in 2004, but from 88 to 2004,
Yeah,
that's what's being mined.
yeah.
Okay. So I suspect they'll be there for a few years at the rate they're going. And the savings to Eco Maine is about $500,000. So there's two types of savings. One is the airspace that we're saved. Basically, we're manufacturing some new airspace through this process. And then also the sale of the material. Although the sale per ton isn't huge, it does add up. And it's about half, the revenue comes about half from each source.
it requires no output of labor or effort on your part. It's totally the contractor.
It's totally the contractor. They set up shop. It's their equipment. It's their employees. And the only risk really was for us is if the market crashed and they walked. But we have provisions in the contract with a letter of credit to basically replace the site the way it was when they started.
And that's a pretty neat concept, and that's very innovative and very thoughtful on your staff's part. I mean,
Absolutely.
It's just, that's sort of, you guys definitely are thinking outside of the box, and I think that's what's put Eco Maine, put us in that sort of position.
Yeah, it's a good program.
Yeah, absolutely.
We're also, and this would be, I think, of interest to the town of Scarborough, but because the landfill obviously is in the town of Scarborough, at least half of it is. The other half is in South Portland. But we're doing an expansion project. Again, I'll reference one of the attachments. The board actually reviewed this at their last meeting. But you can see this is only a snapshot of a portion of the landfill. I don't actually have the waste landfill on here, but just the ashfill areas. And you can see on the right-hand side, the ash fill, that's a 30-acre cell, and that's actually where we're doing the mining of the ash and the screening of the ash. But you'll see, if you move to the left, which is in a southerly direction, you'll see where we're depositing ash now, which is phase 1, and you can see it's gray, so there's ash in place there. But we're in a situation where we need to expand in a southerly direction again to phase 2. We were going to do phase 2 all as one, decided that that wasn't the right thing to do, and so we're going to do half on the west side and half on the east side. That'll save a little bit money up front in infrastructure. The cost of the phase 2 west expansion is about $2 million. It'll last about 5 years, and we hope to have construction start on that sometime this summer. That expansion does include 2 upgrades. We want to, right now we have a pump station that pumps the leachate out of the landfill. We want to basically change that, replace the pump station with a gravity feed. So that would mean a penetration through the liner, and the leachate would be gravity fed to the treatment facility.
And that's just as effective.
The regulations have changed over time. 20 years ago, it was all penetrations, and a lot of the regulators felt like there were too many failures with having gravity lines in their landfills. So they required pump stations. And now, 15 years later, we're beginning to realize that pump stations are high maintenance. They're basically, that's our black eye right there, causes all our trouble, and the gravity penetration would serve us better. And the regulators are seeing that performance as well.
Two questions. Where does leachate go? Is it Westbrook or South Portland?
Portland, all the way
to
to the
Portland.
East End wastewater district. So it's a long line all the way there. Yep.
Is that commingled with other? It's not a dedicated line, obviously.
It's a dedicated line all the way to the, in Westbrook, the Racket Club on County Road 22, and then it's a combined line thereon.
And the other question is, with the expansion, where does the property lines, municipal boundaries fall in relation to this map?
It's roughly between phase 1 and 2. I might be off a little bit, but between phase 1 and 2 of the expansion area.
And is there any responsibility to come to the host, I'll say the host community, as part of that expansion project, or is that all done through DEP?
We fully plan to come to the town, and our landfill manager, Tom Raymond, reported at the last meeting that he will come to both towns, both the city and the town. And but because it's not, it's more of a formality than anything else, because it's not required, because we're not actually changing the permit. We have a live permit already.
That's right, and that was all done years ago, Tom. That was all approved.
Even if it's not a requirement, I would recommend.
Well, that's what we
great,
did. That's what the board decided,
Well,
actually. It just as a
As a
courtesy.
Terrific.
Yeah.
Certainly.
Go to Tom.
Yeah, I can assist you or your staff in terms of getting on the agenda and such. We'll make sure it's not very painful for you.
Good. Landfill, one of the reasons that's accelerated our need to move into the phase 2 area, the western area, is we were experiencing some movement of the subsoils underneath the phase 1 area, and so that kind of moved us along to go horizontally rather than vertically, because we don't want to add to the weight and make that problem worse. We have done some remediation. The movement of the subsoils has almost just about stopped, so I think we're in real good shape. And now we can monitor that over time to see if there's any movement going forward. The final item that I just wanted to mention was legislation. We've been working on a number of pieces of legislation, both at the state and the federal level. I'll start with the state level. The 3 bills that we've been actively monitoring, and there was about 8 bills that we were following, but the ones that we've been actively monitoring is LD 424. That's an act to stimulate demand for renewable resources. This bill is a carryover from the last session. It's actually a bill from the waste to energy industry in the state of Maine, and that was, because we've seen our electricity, the price of our electricity deteriorate over the last few years, we feel in order to sustain waste to energy that there has to be some kind of value for the electricity of the product that we're producing. And so we argued, our argument was that we are considered renewable. However, we were getting very little in the way of renewable energy credits for the electricity that we generate. We are considered a Class 2 renewable. And in the state of Maryland, recently, waste to energy was elevated to a Class 1 renewable. And we feel that that's where it belongs. And garbage is something that replenishes itself. It keeps on coming. It's not going away. So we feel it is certainly renewable. Both the EPA and the state of Maine consider our waste to energy renewable. Now we just have to make it worth something. And so that bill was to stimulate demand for our renewable resources as other renewables have done, such as wind and solar and all the other renewables, wood, that are out there. Unfortunately, that bill just a week or 2 weeks ago was passed out of committee, ought not to pass. There just wasn't really any support for expanding the renewables portfolio. There's also a bill, LD 879, an act to ensure adequate landfill capacity in the state for solid waste, and also LD 278, an act to stabilize solid waste management funding. Those bills are similar, at least our angle on them was similar, and that is, right now it's cheaper to landfill raw waste than it is to landfill ash. And the hierarchy in the state is reduce, reuse, recycle, then composting, then waste to energy, and then the very bottom rung is landfilling. So the fee structure does not follow or is not consistent with the waste hierarchy. And we feel that there, as many other states have done, there should be a higher fee to landfill raw waste. If you're going to store landfill, because it doesn't go away, you're going to store waste in a landfill, you ought to pay a higher price than if you process the waste and stabilize it and then just landfill the ash. Those bills are both still active in the Environment and Natural Resources Committee. But there doesn't appear to be much of an appetite for fees right now with the current times we're in. So I don't know if those are going anywhere, but at least we've been advocating that certainly there should be a benefit for the waste energy communities, which are a big portion of the state of Maine, for not landfilling raw waste, or to de-incentivize the landfilling of raw waste. What that would also do, the added benefit, it would stop the importation of waste into Maine. A lot of waste comes into the state of Maine from other states and is landfilled in our state. And one of the reasons, or one of the ways we could stop that is by putting a fee associated. If you're going to store your waste in our state, then you're going to have to pay for that. Pennsylvania, if you can imagine, was a recipient of a lot of waste coming from New York State. And they didn't want all that waste coming from New York State, New York City in particular, coming into Pennsylvania. So they put a fee on that, and they basically said the same thing. If you're going to landfill in our state, you're going to pay the price. They can't discriminate between in-state and out-of-state. They can just apply the fee all the way across, according to the Commerce Clause. We're also we've also been working on federal legislation, the RPS, Renewable Portfolio Standard, and now more commonly referred to as the CES, the Clean Energy Standard. And we want to make sure that we're included in those bills as well. One of the things that we've been arguing right now is waste to energy is included in the CES, but only waste to energy that's less than 20 years old. We're less than 20 years old. We feel that most of the waste energy plants are less than 20 years old, but still feel the importance of being included in the clean energy standard. So we've been lobbying on that front, and we belong to a coalition of local governments that own waste to energy facilities across the United States. There's 17 members on that coalition, and we're working together to try to push that agenda along. And in summary, that's what I have for an update this year. We try to communicate as best we can with our local communities, our owner communities. We have a number of ways we do that. We have a newsletter. We have briefings that come out monthly. The newsletter comes out monthly. Of course, we have our board meetings, which are open to everyone. And we encourage anybody who's interested to get in touch with us. We try to keep our website current and up to date, and it shows because we get quite a few hits. But certainly, if we're not reaching the community, particularly in this case Scarborough, let us know and we'll make that happen.
Yeah, I think you do a terrific job, and again, Mike Shaw is on the executive board. Did you want to have any comments, Mike?
I think Kevin and his staff just do such a wonderful job with managing the day-to-day operations. But then again, you know, these initiatives with working with law changes, with mining projects, those sorts of things. I mean, those are the laws. I know that one of the legislations was knocked down, but I think that is still foundational groundwork that is going to pay in the future.
Gets the idea out there.
Still time well spent. And, you know, I think that just like I said, the day-to-day running, the efforts that their staff put towards helping the member communities and that sort of thing is just tremendous. And you know, you and your staff should be applauded for the work that you do.
I echo that. I'm on the board and Mike's on the executive board, but I just think we are ahead of the curve on so many things, you know. We seem to be out there. You feel like, you know, we're not holding on, but we're certainly looking into new things and new ways to improve what we do. And certainly, I think that shows, you know, with the mining of the metals and, you know, the new programs that we're pursuing. I just think it's terrific. For me, it's a learning experience to be on that board, but I really appreciate Kevin and his staff. There's never a lack of information, Kevin. I can tell you that. I mean, if anybody in this council, this town needs information, you're right there, and you have plenty of information out there, and I certainly appreciate that. Did you want to say something?
Well, I just, you know, when Councilor Elquist comes back and reports he's gone to a, you know, Eco-Maine meeting, he always comes back and you can tell that he's enjoyed the meeting, he's enthusiastic about it, and just, you know, can't say enough positive things. So, you know, I think your plans are very, very prospective, and that's what's important, staying ahead of the curve. And as Scarborough likes to be ahead of the curve. So, you know, and I think you do a great job.
So certainly, if any councilor hasn't been through, we should encourage that and probably push that, you know, or anybody.
I went
would like
over,
to do that.
I think, oh gosh, probably in the mid-90s is the last time.
Time to go back.
It's time to go back and take a look again.
Yeah, let's set that up. That'll be good. Tom, you?
Yeah, I'll put that out and go through Kevin's office.
Yeah.
Arrange it.
Yeah.
Certainly.
Because I was fascinated with it when I went, you know, I can
We're gonna
remember
go sometime
the
like
big
April,
crane
between
and,
April 22nd and 25th. It'll be
Prime time.
ship shape.
Yeah, prime time, yeah. And these books will be made available to the rest of the
If I could get
council?
5 copies,
That would be
the
awesome.
council members
We
can
would appreciate that.
And just for my purposes, I can't think of another bill that the town receives where we've seen a reduction, much less a 20% reduction. So
Yeah,
for that,
exactly.
I'm very thankful. And although I'd love to see more, I appreciate that you need to be good stewards of the asset you have and to take care of it. So I think it's prudent to be able to provide some dividend back to the members, but still be prudent with the finances.
Good. Anything else?
Yeah.
Thank you, we
Thank you.
appreciate it, and good night, everybody.
you.
That concludes our
Yes.
workshops for the
we'll go home and look for the other.
I don't know if they want extras for anybody, but we made them, so.
Can't you recycle them?
I can. But if they're reused, better.
You know, but I don't.
They're used.
Good to see you. I don't tend to bother you much because I know Mike's in your ear all the time.
Yep.
Ron's watching out.
Let me know if you want to come over and take a look.
Oh, I gotta do it.
Anytime.
Get everybody.
Have you ever
to
been
do
over
that.
there, Tom?
I have.
Have you?
It's,
Yeah.
Kevin?
been 3 years or so.
Appreciate it.
They're doing some good construction now, too, so I mean, those are